Today we're going to be taking the first look at Drift, a perpetual futures trading platform built on top of Solana. They have the backing of some of the biggest names in the industry, and as to date, they haven't released a governance token yet. So they've recently launched on mainnet, and it's a lightning-fast, scalable perpetual futures DEX. It's similar to Perp on Ethereum. I think some of the team members involved, there's some crossovers there as well. Let's go ahead and trade this on open mainnet. Connect your wallet and deposit USDC. So for collateral, you can only use USDC on this network. It looks like the limit we can use is 5x leverage. I'm using the Phantom wallet. I'm going to deposit some USDC to try this out. Wallet balance is $16. I'm going to deposit 15. And we've got $15 of collateral posted to our account. So we've got Sol Perp here. Let's have a look at the other markets. We've actually got Luna Perp as well that I've added. So we've got Sol, BTC, ETH, and Luna. I think in the spirit of the video, we should put a long position on Solana. So we can use up to 5x leverage. We've got a slippage tolerance here as well. Note that there's no limit orders currently. You're actually trading against a virtual automated market maker. There's not an order book with bids and asks, so your slippage is going to be somewhat unknown, similar to using Uniswap or SushiSwap. Let's go ahead and execute this trade. Let's turn confirmation off in future. Approve that transaction. Now you're going to have to pay a little bit of Sol and transaction fees every time you want to execute a trade. Block hash not found. Let's try it again. So we can buy in 0.0395 of Solana. Let's approve that transaction. And we've got a position here. So we've taken out a notional $7.50 position in Solana. We're only using 1x leverage here. We can ramp this up to 5x. So let's increase our position size now. And start using a little bit of leverage. Let's increase that bid. So we've approved the transaction again. We've now taken out a 0.2171 Solana position with a notional price of 41.23, using only $15 of collateral, and our average entry price was just under $190. We've got an estimated liquidation price of $130, which means our entire account gets liquidated if Solana drops below that price. That is obviously estimated, and there's lots of different things that go into that. The profit and loss on this position is 0.01 or 0.02, but my account's actually slightly down. I think this is due to the fees. They charge 10 basis points fees on each trade. If you think of basis points as a percentage of 1%, then 10 basis points is 0.1% on each trade. It's roughly double what I'm paying on taker fees for something like FTX. And that brings me to an interesting point. I think a lot of these trading platforms built on top of Solana particularly are almost trying to create a DeFi version of FTX. And I'm not sure from a user experience perspective whether you can actually compete with FTX. They've got a very smooth platform because it's centralized. It's hard to do the same thing and to make something that's 10 times better on DeFi. You've always got that latency in the blockchain backend, which is a hindrance to user experience. I think to kind of really gain traction in this space, someone needs to come up with something that's slightly different to FTX, maybe using different automated market makers, maybe even cross-chain interoperability, so you can take out positions across different blockchains and different ecosystems, all from one trading platform. I think that'd be really compelling. Whereas something like this, or Bonfida, Mango markets, they seem to be struggling to gain traction compared to the centralized exchanges because they're not as easy to use. I don't know if the average trader cares enough about decentralization to put up with increased latency, higher fees per trade, blockchain congestion at periods of peak volatility. All those things kind of are working against these platforms gaining kind of a mainstream adoption. Now, having said all that, there's one area where I think Drift as a perpetual futures platform could do really well, and that's on the funding rate arbitrage. So I think there's a lot of opportunity here for people building vaults and yield farming strategies on Solana to take advantage of the funding rates. You see currently Solana has a 39.53% APR funding rate. If you have a look at Bitcoin, 33%, Ethereum, 102% APR. If you track your portfolio or fund in US dollars, then it opens up some really attractive delta neutral strategies where you can long one asset and short it on a different exchange, and you can collect that funding rate premium, because these are way out of line with most of the rest of the industry right now. If we switch to stats, this is a 24-hour chart, this is a weekly chart. You can see that we've seen some classic hockey stick growth. It's a new exchange, currently there's roughly $15 million of volume per day being traded, which is, in the grand scheme of things, that's not a lot. You think that some days Binance has over $100 billion traded. Active traders, we peaked last week at around 2,000. Bear in mind that this is we're on the 8th of December today, so this is only one day in. We're likely to see a new all-time high this week in the number of active traders. If you dive into their GitHub repository, let's have a look at this protocol. I always think when they put V1 on the front of it, then they're kind of expecting a refactor at some point, which isn't a bad thing necessarily, but it's something to bear in mind. This code might be slightly experimental. And we can see we've got 5 developers here. Chris Heaney of Drift Labs seems to be the main person working on it. With Luke Khan also been actively involved since it started in September, or at least the GitHub repository went live in September. So we can take from this that it's a fairly small development team, but it's being actively updated regularly. There's people working on the project. So Drift's open mainnet went live 5 days ago. We had an alpha trading stats and open launch. Drift Labs raises 3.8 million in a seed round, so they're well funded. Multicoin Capital, Jump Capital, Alameda, normal suspects. Some notable angel investors, Jason Choi of Spartan Capital and Julian Coe of Ribbon Finance. It's interesting because Ribbon Finance build vaults based on derivative platforms, mainly options, I think, but that could be something for the future. They're hiring as well, which I think is a good sign for growth. They obviously got some funding, so they can do. They're looking for engineers, mainly, head of business development. And we can see they're looking mainly for people in Sydney, Australia, and the US, which is, I assume, where the company is based. So if we go to the docs now, we can read a little bit more about their virtual automated market maker. They're using the same formula as Uniswap, X by Y equals K. I read somewhere that they can adjust K, or the admins can adjust K to increase or decrease slippage depending on market conditions, which is interesting. I'm not quite sure how that works. So their goal is basically to increase K over time to lower the slippage for traders. So there's still some centralized admin controls that the team has, which is fine. We have BitMEX style insurance fund as well, which receives a fraction of collateral from successful and valid liquidations. And then we got more information on margining, profit and loss, funding rates. And equally interesting, they've got a little tutorial on how to build a trading bot in JavaScript. And this open source code uses Solana's Web3 library to check prices and open positions. It'd be an interesting thing to play with, especially if the platform starts to pick up more kind of retail discretionary trading volume. So let's go back to the platform and see how our position is doing. We're at 0.06 up. So let's close this position, close 100% of the position, approve the transaction. So you can see that even though we closed the position in a profit, the account balance is actually lower than what we started with because of the fees, so we're 2 cents down on the day. To withdraw the funds back to our account, we simply withdraw USDC, put in the amount we want to withdraw, confirm the withdrawal, and that concludes our first look at the Drift protocol on Solana. Hope you've enjoyed this video. Subscribe to the channel for updates and hit the like button for the YouTube algorithm. Thank you for watching.